My grandfather always used to say that invest in things that you can never lose. The only thing he ever held in his portfolio was real estate because you always had. He said he was not an educated man. I actually was one of the first in my family to ever even go to college. But he always says no one can ever take your education or knowledge that you've accomplished in the world and your real estate. You're always going to have those things.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. I'm so excited about today's conversation. She comes in today listed as tax strategist, but there is so much more to her, to our relationship. I actually met her through Perry Marshall, if you've heard of Perry Marshall before, and she was actually in the book Memos from the Head Office. We're going to talk a little bit about the memos from the head office and how she's an entrepreneur that is a tax strategist, and how she invests in real estate. How do we tie all of these things together? Well, stay tuned, listen to this. Everybody, please welcome the tax strategist, Shanyn Stewart. Well, the time has come. Shanyn, welcome to the show. I'm so excited to have you. Thank you so much for your time today.
Good to be here. Thank you.
I don't think the listeners have any clue what we're in for today. It's kind of like how I stumbled upon your path, or how our paths cross is so remarkable. And I'm so excited to share you with the world here on the Real Estate Mogul MD. So on the Real Estate Mogul MD, we talk with a lot of physicians, coaches, investors, entrepreneurs, and you're so many of these things. One of them of which you're not a doctor. I'm not a doctor. But you have studied and you have a very specific niche that you're in. And I love that. And I want to share that with the listeners. Could you just start by letting the listeners know a little bit about your background, your professional background, where you started and where you're at now?
Definitely. So I started years ago as one of two advisors that worked for General Electric, and I worked helping the GE presidents and employees of GE mitigate taxes and do financial planning. And then from there, GE, as that does, decided that our business was no longer a business they wanted, and they sold us off. And I determined to start my own business. And so that was about 30 years ago. Wow. And I started a full service tax planning, accounting, full service firm that caters to entrepreneurs and real estate investors.
Entrepreneurs and real estate investors, those two things just light my candle right there. I absolutely love it. And I've heard you say before, I'm an entrepreneur who is a tax strategist. And that's such a cool perspective of it. And that's why I love our conversations. I can't wait to get into more of this here. But what does that mean to you when you say I'm an entrepreneur and a tax strategist?
So I don't think like a typical tax professional. Oftentimes when you're working with like a CPA, they're very, very conservative in their outlook on everything. So before I even ever put on my tax professional hat, I'm thinking as an entrepreneur. I'm thinking of everything that I do from that entrepreneurial standpoint. Then I filter it through my tax professional lens, and not the other way around. That often lends itself to mean that I'm not risk adverse. Now, that does not mean anything I'm going to ever walk in the gray with one of my clients or anything of that nature, because I also do representation work, meaning I represent people when they get in trouble with the IRS. But I'm not going to look at it of all the worst case scenarios that are going to happen. What I'm going to look for is what's the entrepreneurial opportunity here? How do we take advantage of that opportunity while within the scope and the framework of all the tax laws?
And that's kind of how we met. Mm-hmm. And I want to kind of backtrack this thing. We met, you were working with a high income individual, had what they call a trigger moment in his career. We had sold a business or part of the sale of a business and was looking at all this capital and saying, Shanyn, what do I do? And you were helping him out. So I had met that person through a mastermind that we were in. And that gentleman's name was Perry Marshall that put this together. So if the listeners have not heard of Perry Marshall, I just want to encourage everybody to go out. The books, the groups, the masterminds. I'm just dumbfounded. I found myself sitting at dinner at the table with Perry Marshall in New Orleans. And, we started talking about things. And the one obviously thing that, the Evolution 2.0, and then I don't think that we actually talked about memos from the head office, but that's where I learned of you after we started working with the one client. And there's telling the story in Memos of the Head Office, another great book. Everybody should go out and get it. Is this story of Shanyn and
here's the book actually. So
Memos from the Head Office. That's amazing. And tell us a little bit about just like a brief summary of how that came about. How did you end up in that book? Did you know Perry before then, or what was the story about?
So I engaged Perry years ago, like most people do from a marketing standpoint, because he's the marketing guru. And I actually went out to one of his city tours in Colorado. One of my CPAs that works for me said, "You need to meet Perry Marshall." And so he actually paid for me to have a hot seat at one of his city tours.
Wow.
And I showed up and I started speaking to Perry, and immediately we connected. I did not know what Memos from Head Office was at the time. So I'm a former American Baptist pastor, but I said to Perry, "Can I give you a word about something?" And he's like, "Oh, what is," like Perry was all over, like he was like clapping his hands, ready to hear something from me. And I gave him a word about the future. And he was like, "Do you know what a memo is?" I'm like, "No, I don't know what you're talking about." And then that just grew our friendship. And Perry and I have become good. I consider him a friend. And when I go to Chicago, I drop my kid off at their house so they can play and things of that nature. They don't play; they're older children now. But Perry has a great organization. So you met me through Memos from Head Office. So Memos from Head Office is a program that Perry has where people can actually, entrepreneurs and business owners can actually get on a call and have someone give them a word, an intuitive word about the future or about something that they're dealing with. And so he has what we call expert memo calls, where you can actually get with an expert. So like I was a tax strategist expert who gives the ability to actually give intuitive readings. And it's a non-religious thing. It's a DMZ zone, non-religion, so that anyone of any walk or any faith can actually come and actually get that word for the future.
Interesting. And I know in that book, Perry's whole start was the book that he wrote about Google AdWords and stuff, and how that all came about. Interesting. I just kind of want to lead this conversation into not only you an entrepreneur and a tax strategist, but you also invest in real estate. So I'm going to tie all this together. But first, before we get there, tell us a little bit about your real estate investing.
So, years ago, at the peak of my real estate, I had 27 individual rental properties. And unfortunately, then I went through a divorce. And so that kind of whittled all of those things away. Today, I do mostly commercial real estate. And so I not office buildings, but more industrial retail type spaces from that standpoint. And I'm looking for those, those commercial spaces that have the triple net leases. They're the foundation of my portfolio that just begins to spin off that reoccurring, 6-7%, cap rate. That kind of is just my automatic wealth creation.
In that 6 and 7% cap, are you looking at any of the equity multiples? Do you plan on turning these things to capture any of that equity, or is it just the cash
Eventually,
flow?
I think it's all based on every single property. It has its own characteristics, and so really, as they're added to the portfolio, I revisit them, periodically to determine if it's the right time to sell, and my frame around real estate has always been that, it comes from my grandfather. My grandfather always used to say that invest in things that you can never lose. And so the only thing he ever held in his portfolio was real estate, because you always had. He said he was not an educated man. I actually was one of the first in my family to ever even go to college, but he always says no one can ever take your your education or knowledge that you've accomplished in the world, and your real estate. You're always going to have those things.
That's awesome.
And so real estate is really the bedrock, but every single property has its own characteristics and why you would hold it or not hold it, over a period of time.
And then now tying this back to the memos to the head office kind of perspective, and even in a religious perspective as well, too. It's so hard, like juggling these things when we're looking at real estate. How do all of this tie into real estate, or does it tie into real estate for you, Shanyn?
Well, I mean, so first of all, my life, so I always tell people, some of the other podcasts I have out there about memos is that I live my life one memo to the next. So it's become a practice of mine. So when I sit with my Renaissance time, my quiet time, that's like my devotional time. I'm asking, like, Father God, is there anything I need to know about X, Y, or Z? Because oftentimes we are so busy in our lives that we're just like, especially as entrepreneurs, especially as serial entrepreneurs, we're like, just plugging ahead, getting through our day, getting what we need to be done from our business standpoint and our personal standpoint. So I'm asking, and I hear out of my right ear, is there anything I need to hear today? Is there anything I need to know today? So I have a real estate broker who was always emailing me deals, like, and he'll say 8% cap rate, and you need to, jump on this. And he's gotten so used to me saying no, hard no, yes, no, I'll look at that, no. And before, when we first started working together, before he understood memos, he'd be like, well, let's have a conversation. And I'm like, it's already been decided. It's already been decided. And so memos gives me the ability to have really strong intuitive nature, that I can make decisions very quickly, with a high degree of confidence. And so Perry's organization for memos is a great place for people are, questions about that they can plug in and learn more about that kind of thing.
And I love how that you related it specifically to real estate. And I'm just pulling back again, a note from the book, a warning of, not making hastily movements, and, things that could damage you, and thinking that it's a memo, or thinking that you've gotten this specific information. And the one example I remember, I think it was another gathering or event, and they decided to do a free instead of a small monthly thing, and it totally crumbled the business. So always watching out and having that sense of caution around it when we are talking about business, when it comes to those kinds of intuitive thoughts.
You always want confirmation, right? You always want, from a Christian perspective, we always are like, if you get a word of knowledge or a memo from head office, where is it? Where can it be backed up, or where is there confirmation for that? So as for me sitting in kind of the driver's seat of as someone who gives memos and receives memos over 30 years, over time, I've developed that confidence. But you always want to make sure that, if you don't have peace in something, you should probably, like, if you have that gut check, then you need to obey that, as be like, oh, I need more information. I don't have enough information in this situation.
Interesting. And whenever I have conversations like this, I always feel like I need to ease things, not trying to offend people. But I love that we were able just to talk about it, and the religion thing. There's intuition, there's religion, all of these things. And so many of us in the human nature have these sort of intuition, these feelings. And I'm relating it back to like the infinite mindset and being comfortable and confident, and content, but not complacent, and just having in this presence where everything is possible. And the more that I relax and listen to and see what I've been given, then there's so much more that's available. You mentioned that unfortunately, you had gone through a divorce, or fortunate, depending on how the situation was for you. I just want to talk about that just for a second, and how that related to the real estate. And if you could give any of the listeners who may be experiencing something similar, maybe going through a divorce or had gone through a divorce, what was it in regards your learning, your takeaways in regards to the real estate in that scenario?
Well, I think it's just overall good advice. I think that when I look back at my own particular situation, I think that, and this holds true in any business relationship, because marriage is a business relationship as well.
Mhm.
I think that one of the mistakes I have made and I tend to make is that I don't always get things in writing, and I take people at their I want to believe that people at the heart of them are good. And so should you have a prenup? If you're in a business arrangement, should you have everything in writing? Should you have the start of a relationship in writing? And if it goes south and you need to get out, should you have the exit in writing and agree to everything while things are good? You probably should. And that's not only for marriage. I think that's for, that's for business in general. I'm not a big proponent of partnerships or business partners. I think that if you are in a partnership, then really you need to have everything spelled out really clearly.
Yes, the entrance and the exit.
Yes. And
All
agree.
aspects.
Yeah,
And
exactly.
the
Agree on
divorce. What happens if there's a divorce,
Yeah, because I mean that happens in business. You'll have a business partner and there'll be a divorce
Mhm.
and a breaking up of the partnership. And what does that look like from that standpoint? And how and agree to those things while you guys still like each other. It's like, if this happened, could we live with this? And let's pray to God that it doesn't happen. But if it does happen, how do we actually part as friends? Like, I just had a business relationship that ended, and we had everything in writing. And so there was no question. We're like, you know what? We're both going in different directions.
Mhm.
And, we're in different directions. And we've got an agreement. Let's figure out how we get out of it, because we don't have the time to dedicate to this particular thing right now.
Yeah.
So,
Um, and then those assets in the divorce, back on that little note,
mhm,
just what are some options that can be? I know in the direct to seller world of single family real estate, single family residential, we've done a lot with divorces, and it's a
mhm,
tough situation, especially when it's the home that the family lives in and they can't afford anything else. That's a whole nother crazy situation. But in these
mhm.
investment properties, you can liquidate them, you can split them. What are some other options that are out there for this particular situation? Because most of the time, Shannon, we're not going to have that prenuptial agreement,
Right,
right?
right. So I think one of the things, I mean, definitely there is just assignment to one spouse or the other. You're splitting assets, and so hey, I'll take the retirement plans and you take the rental properties. So it's a division of assets from that standpoint. I've seen a division of assets and then someone 1031 exchange them into to better assets from that standpoint. Oftentimes in divorce, unfortunately, they're sold though, and they're
Yeah.
sold at a deep discount, which is great for the investor because we can go in and we can swoop them up, from that standpoint. But unfortunately for the owners of it, when they're going through a divorce, they get so marred in emotional turmoil that they don't necessarily think clearly. Again, that's where I would also caution anytime that you're doing something from a business standpoint, because rental properties are a business, that you try to remove as much emotion as you possibly can. Because when we're emotional, that we don't hear well, we don't think well, we react instead of responding. And so learning to practice the pause and learning to respond and not react, especially like in a divorce situation, is really critical. And get outside guidance. So let me say this, and I'm not trying to throw divorce attorneys under the bus, because I have a client right now who's going through divorce, and he just sent me like the proposal just for my feedback. And I'm not an attorney, but putting on my tax hat and my financial hat, I said to him, well, have you considered X, Y, and Z? Like, have you considered this other avenue? And then he went back to the attorney, and the attorney's like, oh, I didn't think about that. So
Mhm.
do not just necessarily believe that your attorney has all the answers. Make sure that you have other outside counsel, like your accountant, like, your financial person, seek other wise counsel. Have lots of wise counsel that you can tap into.
While you were saying that, I heard while you were saying that, the react and respond and emotional thing, all I could hear is don't send it. Don't send it. Don't send it. So however anyone may take that out there that's listening, don't send it. So that's just a great way to pause, for sure. So we're talking about tax strategy then, Shannon. What are some of the highlights of being a tax strategist, an entrepreneur, and a real estate investor? What are some of your top takeaways from that awesome relationship?
Well, here's the thing. I love real estate. Real estate is a great tax haven from that standpoint. And I think one of the things that when you're looking at real estate, there's so much that can be done. And really so one of the things to say too is that real estate actually can create a really great legacy for your family. It's a great way to build wealth for your family and then also pass on a legacy to your heirs at a tax advantage rate. So for instance, if you're holding real estate, you want to, before you ever sell it, you want to consider like, can I 1031 exchange this into something else? If you're holding real estate for a long period of time, should I do a cost segregation study to actually accelerate depreciation? And then if I'm getting ready and I'm building my estate plan, am I at a point in my life when I don't want to actually liquidate and sell my assets while I'm living? I want to be able to let my heirs inherit them at the step up in basis. So when we're talking about real estate, these are all the great things that you actually can do with real estate. And then when you're looking at creating wealth for your family, if you're looking for the capital appreciation where you're going to actually sell or you're going to 1031 that asset into a new asset, but what you're also doing is you're creating that automatic income and cash flow that's tax advantage to you. So, I mean, it's a really great planning tool, not only from a tax planning side, but also a wealth creation side of your portfolio.
Yeah. I love it. I love that path. Depreciate, exchange, and ultimately depreciate and die. And that step up in cost basis is the difference maker. So I'm always thinking, if you have a situation where you're going to inherit money, if you could somehow have that put into real estate before it's inherited, then it's a whole different path
Right.
that it could make it to you. There was the step up in basis. Can you tell us just a little bit more about what that means?
Right. So what happens with the step up in basis is, let's say you have a property and you purchased it for $100,000 and you've held it for 30 years. So you've used all the depreciation, you've taken all the depreciation, and after 30 years, this property is now worth $500,000. Well, you don't sell it, you pass away, and your heirs inherit it at the step up in basis, or what the fair market value is on the date of your death, which would be $500,000. So now that becomes their floor. So if they sell it, they could sell it for $500,000 and pay no taxes, or they could hold on to it and then let it appreciate. So if it's $700,000 when they sell it, their basis is $500,000. So they only pay the difference between the $500,000 and the $700,000 as their capital gains rate.
Unless it was a single family home and they lived in it in 2 of the last 5 years, right?
That's correct.
So
and then,
these...
if they moved into that home, let's say mom and dad, someone passes away, they move into it, it becomes their primary residence, they live in it 2 out of 5 years, then they could sell it and we're talking about today's tax law, because tax laws change. But as if they're a married joint, they can make up to $500,000 on that sale, income tax free.
These are these little nuggets that just, I mean, not all CPAs know. Hopefully, a lot of them will, but there's so many that comes down to strategy. That's so important. I hear a lot when I heard it once, and I keep saying it. That's why I hear it a lot, because I say it all the time. So we've got passive income and active income. Our passive losses can only offset our passive income unless we have an REP status, real estate professional status.
Right.
Somebody mentioned this idea to me that keeps running circles in my mind, is if the idea is to get all of our income into the passive bucket. In my mind, that's like, okay, that's maybe all real estate, but it doesn't necessarily have to be that. We can structure businesses to have passive income. When I say that, Shannon, what does that mean to you?
So, I mean, so one of the things I always go to is like, so as an investor as well, like oil and gas. Oil and gas can offer tax advantages if in certain circumstances, but also create passive income. And then we can offset passive losses with that passive income. So if you have passive losses on your real estate, and then you have gas and oil, which creates passive income, they can offset the two to create cash flow with no taxation.
Mhm.
So I think that's one of the things to consider. Again, it's all about living within the definition of the IRS guidelines for passive and active entities and income. And again, that's where the strategy comes in. And you're right, a lot of CPAs or tax professionals, so I'm an enrolled agent, which if you Google enrolled agent, we're the only federally licensed tax professional in the United States. We're known as America's tax strategist. That's where bringing in a strategist, someone who that's how they're thinking all day long is how do I strategize to pay the least amount of taxes legally possible becomes so important because oftentimes our tax professionals that we're working with are so busy just keeping us in compliance. They don't have a lot of time for strategy. And that's what makes us a little bit different in our engagements with our clients. They actually get advisory services, not just compliance services.
Interesting.
Mm-hmm.
I'm going to drill down on that question just a little bit further. How do I create? I know you're not an entity attorney. I understand that. Nor am I. How do I create a business that I can take passive income from?
Well, I mean, so I think it's about, okay, so oftentimes when people have entities that have passive income, they already have an active income as well. So they might have a company where they're 100% active in the company, materially participating in the company from that standpoint. So if they're materially participating, so one of the things when you fill out a tax return for an entity, you actually say how much ownership do they have, how many shares do they own, how much of their time are they committed here, and do they materially participate? If you're not materially participating in that, then it's oftentimes going to be a passive activity for you.
Interesting. And so if I'm building this company, I get to the point where I've created my systems, my processes, I've brought in the right people, and I've even reached out to you for the concierge CFO, right?
Mm-hmm.
That's something we could talk about too. And now the business is taking care of itself. I'm not materially participating in this. My income then becomes passive.
That's correct. So it depends again, and again, it depends on what type of entity you are, if you're a C Corp, if you're an S Corp or a partnership. So definitely, but so it's all hinged on how am I actively participating here? But if you're
Love
just
it.
like, I mean, there's oftentimes we have, and it also depends on like, let's say if you're a partnership, if you're a general partner or a limited partner. And oftentimes I'll see where like, so for instance, you might have been a general partner in the first couple of years, and then you aren't materially participating. It isn't really your company that you need to show up every day and do the work. Now you become a limited partner. And so it depends on all of those different kind of classifications of, but really the first question is, do I materially participate?
Interesting. I love it. And if the listeners want to connect with you, it's advancedaccounting.com.
That's
And
correct.
yeah, and there's, I mean, you've got so many explanation videos on there, ways to connect with you, clients, what they say. I mean, if they want a good referral, they could just call me because every time that I see you, every time I see your name, it just puts a smile on my face, Shannon.
Thank you. I appreciate that.
Well, thank you for your time and for your experience today. It's absolutely wonderful. Enjoy the conversation. Love to have you back again in the future. I'm sure we're going to have plenty to talk about. So thanks again for your time.
Thank you.
And to the listeners out there today, that's advancedaccounting.com. There is a massive difference between planning, strategy, and then just getting your taxes done. And just like with our emotions, there's a response and a reaction. And if we can be proactive on this stuff, especially if you have a practice and you're that trigger point, that inflection point where you're going to have these moments, start thinking now. Because if you're reacting instead of responding, then there's going to be an issue. So getting proactive, the best thing you can do is go to advancedaccounting.com and book a call with Shannon. Get that smiley face all the way from Detroit, the General Electric special, huh? Very, very cool. So thanks again to the listeners today for your time and most importantly, your attention. If you have any questions for us, info@physicianwealthsystems.com. And we'll see you on the next one. This is the Real Estate Mogul MD.